And here are the crypto top headlines. First up, Caroline Ellison, secret recording offers trove of explosive revelations. Next, SEC forsakes appealing Grayscale ruling, spot Bitcoin ETF approval nears reality. Also, Coinbase lawsuit update from Paul Grewal. Plus, FLR network burns 2.1 billion FLR tokens, boosting network development after airdrop to XRP holders. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube and would greatly appreciate it if you would click on the like and subscribe buttons as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Caroline Ellison, secret recording offers trove of explosive revelations. The ongoing trial of former FTX CEO Sam Bankman-Fried has uncovered a series of explosive revelations in the form of testimonies from the former key FTX and Alameda executives. The latest court proceedings on October 12th saw former Alameda Research CEO Caroline Ellison testify for the third day, following which the jury was presented with a recording of a meeting she held with Alameda staffers on November 9th, 2022, just days before the collapse of the FTX empire. The meeting, held in Hong Kong and joined by nearly half of Alameda's employees, was the key moment Ellison came clean about the ongoing scenario with the crypto exchange to her colleagues. This admission was accompanied by a series of explosive revelations about Alameda's financial relationship with FTX. Cointelegraph has obtained access to the secret recording, and we have curated a list of 4 striking elements that it's revealed. Alameda's bad investments led to the financial crisis at FTX. The first and most crucial revelation by Ellison came early in the meeting when she revealed that Alameda had been borrowing money from FTX for a year. She went on to admit that Alameda had made a number of illiquid investments using the borrowed funds. Due to the market downturn, Alameda's loan positions were called in, creating a shortfall in FTX's balance sheet. An excerpt from the discussion. Most of Alameda's loans got called in order to meet those loan recalls. We ended up borrowing a bunch of funds on FTX, which led to FTX having a shortfall in user funds. And so with once there started being like FUD about this and users started withdrawing funds. Ellison went on to reveal that Alameda's bad loans created market panic around FTX, causing users to begin withdrawing their funds. FTX then paused withdrawals to contain the situation, and within days the exchange came crashing down. FTX planned to raise more funds to compensate users. When one of the employees attending the meeting asked Ellison how FTX intended to pay back its customers, Ellison said that the crypto exchange was planning to raise further funds to fill the gap. Basically, FTX is trying to raise in order to do this, compensate users, but yeah, after the crash, no one wanted to invest. I don't know, obviously, in retrospect, the plan of waiting around for several months and like for the market environment to get better and then raise. During the court proceedings on Thursday, Christian Drappy, a former software engineer at Alameda, who was present during the meeting, told the court that Ellison's response about paying back customers sounded concerning to him because he wasn't aware of a scenario where investors have contributed to making customers whole due to bad financial decisions of the company. The nervous laughter. As the secret recording was played in the court, the former Alameda employee also pointed out that Ellison had giggled during the meeting. The employee suggested this was Ellison's nervous laughter, something she often did when in a tight spot. When Ellison was asked by a staffer at the meeting, whose idea it was to plug Alameda's loan losses with FTX customer money, she responded with, Sam, I guess, and giggled. Alameda almost always had access to users' funds at FTX. Another staffer inquired about the backdoor access of Alameda to FTX and asked how long Alameda had been using FTX customers' funds to bridge holes in its balance sheet. Ellison responded, FTX basically always allowed Alameda to, borrow user funds as far as I know. Our next top headline, SEC forsakes appealing, Grayscale ruling, spot Bitcoin ETF approval nears reality. The launch of a spot Bitcoin exchange-traded fund edges closer as the U.S. Securities and Exchange Commission decided not to appeal an order requesting it to review Grayscale's application to turn its Bitcoin trust into an ETF. This development significantly enhances the chances of SEC approval for spot Bitcoin ETFs, with market observers estimating the possibility at 90%. SEC forgoes appeal to Grayscale's case. On October 13th, the financial regulator decided against challenging an August ruling requesting it to review Grayscale's application for a spot Bitcoin ETF. Speculation surrounding SEC actions has significantly impacted the Grayscale Bitcoin Trust discount, reaching its lowest point this year at 15.88% as of October 13th, according to data from CoinGlass. Grayscale and the financial regulator engaged in a long legal dispute concerning spot ETF applications. The firm contended that the SEC's rejection of these applications was arbitrary and capricious, emphasizing what it saw as unfair discrimination against spot Bitcoin ETF issuers. However, the situation took a turn in August when a U.S. court ruled against the SEC. The court questioned the SEC's rationale for repeatedly denying spot ETF applications while approving futures ETFs. The SEC's argument is rooted in a perceived lack of adequate investor protection in spot BTC ETFs. This has led to the rejection of all such applications during the past decade. Bitcoin ETF approval possibility jumps to 90%. Meanwhile, Bloomberg analysts have grown more confident about the introduction of spot Bitcoin ETFs in the United States. According to the analysts, there is a 90% probability that the SEC will approve a spot Bitcoin ETF. The analysts cited the increased interactions between the regulator and a fund sponsor, ARK and 21 Shares, saying, "This back and forth between the SEC and fund sponsors is standard practice for new launches, but a first for spot Bitcoin ETF applications, indicating that the SEC is working to approve ARK's proposal." BN Crypto reported that the analysts had pegged their estimates at 75% following Grayscale's victory over the regulator in August. Several asset managers, including BlackRock, have pending applications for a spot Bitcoin ETF with the SEC. Our next top headline is an update on the Coinbase lawsuit with the SEC. These tweets are from Paul Grewal, who is the chief legal officer at Coinbase, and these tweets were on October 3rd, and I wanted to show you these tweets as kind of a backstory as he updated these on October 13th. So these on October 3rd, he says, "The SEC Gov just filed its opposition to our motion to dismiss their case against Coinbase. It's more of the same old, but don't just take my word for it, take a look for yourself. A preliminary note, over and over again, the SEC makes sweeping claims of what the law is/must be without any legal citation. The assets we list on our platform are not securities and are not within the SEC's jurisdiction. Court decisions over the past several months have made that plain. The SEC's arguments today would mean that everything from Pokemon cards to stamps to Swifty bracelets are also securities. As Representative Ritchie made so clear last week, that is simply not the law, nor should it be. The SEC's continued regulation by enforcement approach also ignores the voice of the 52 million strong crypto constituency in the U.S. that wants rules and regulations for this innovative tech. Last week, founders from 40-plus crypto companies around the country joined at Stand with Crypto in D.C. to tell their representatives to pass legislation that protects consumers, enables innovation, and creates jobs and opportunities in the U.S. We look forward to filing our reply on October 24th. As always, we appreciate the court's consideration of our case. Then he updated yesterday, sent out another tweet, series of tweets. So these were just 18 hours ago. We filed our response to the Third Circuit. The SEC's uneliminating update is more bureaucratic pantomime and confirms that nothing short of mandamus will prompt the agency to take its obligations seriously. We respectfully request an order to the SEC to act on Coinbase's rulemaking petition within 30 days. We appreciate the court's careful consideration of this matter. So it looks like we'll be getting an update hopefully soon on this lawsuit, and hopefully Coinbase will win. Our next top headline: Flare Network burns 2.1 billion FLR tokens, boosting network development after airdrop to XRP holders. Flare, the project that airdropped tokens to holders of the native token of the XRP ledger, XRP, who were holding onto their tokens at the time of a network snapshot back in December of 2020, is set to burn 2.1 billion of its FLR tokens in a bid to support its ecosystem's health and development. According to CoinDesk, a developer at Flare revealed that more than 2% of FLR's total supply will be permanently removed from circulating in the move, which will prevent dilution of community token holdings and raise incentives for new users to join the network. The tokens set to be burned were set aside for Flare's early backers, but the firm agreed to burn those tokens instead. It came to this agreement after consulting with its backers about the first Flare improvement proposal, FIP.01, and how it impacts token distributions to equity shareholders. Flare will burn nearly 198 million FLR initially, with a further 66 million to be burned per month until January 2026. According to Crypto Compare data, FLR is currently trading at 0.009 per token, which would mean the value of the token burn would be around $20 million. As Crypto Globe reported earlier this year, NASDAQ-listed cryptocurrency exchange Coinbase announced it was listing FLR in a highly anticipated move that comes after the exchange revealed it's honoring its commitment to support the FLR token airdrop. Flare Network is a blockchain bringing smart contract functionalities to XRP and other crypto assets that do not yet have them, although it's bringing these in through a separate blockchain than the XRP ledger. Spark tokens are to be used for governance on the Flare network through voting mechanisms, and token holders will be able to earn a return on their holdings by committing Spark tokens as collateral to secure the trustless issuance and redemption of FXRP, a protocol built to safely enable the trustless issuance, usage, and redemption of XRP on Flare. Notably, Coinbase was one of the cryptocurrency exchanges that delisted XRP after the U.S. Securities and Exchange Commission sued Ripple and two of its executives, alleging they sold unregistered securities when they issued $1.3 billion worth of XRP tokens. Ripple denies XRP is a security. Last year, Coinbase said its self-custody crypto wallet app, Coinbase Wallet, would be dropping support for 4 major crypto assets, including XRP, from January 2023 over low usage. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.